Crypto gaming, supposedly the opportunity of our lifetimes to turn a couple $1,000s into a couple of million. I'm sure you've seen the winners of the last crypto gaming bull market. Lady of Crypto turning $5 grand into $2 million. Crypto God John turning $3,000 into $1 million. And Alex Becker also raking in 7 figures worth of gains. But I don't know about you, but for me, there's a little bit too much flexing and not enough crunchy blueprint strategy for us to have the confidence to follow in their footsteps. And I couldn't find an up-to-date guide on YouTube that made these steps clear and concise. So I took it upon myself to distill the philosophies of the best crypto gaming influencers and the best gaming projects down into the 7 tenets of crypto gaming investing, with the goal of turning $1 grand into $100 grand. So, if you don't want to spend the next bull market FOMOing into random crypto gaming projects as it's reaching its peak price because you know nothing about it and the big brains got in there way before you, give this video a like for me, put on your Rubicon hat, and let's jump in. Okay, firstly, there are hundreds of different crypto niches and categories of Web3 that we could be investing. But why are we focusing on crypto gaming? Well, there's 2 reasons. Firstly, demand. Besides the adult industry, gaming is the biggest industry in the world. And in Web 2, there's more money in gaming than there is in the Hollywood and music industry combined. And my favorite game, Apex Legends, makes over $1 million a day just selling skins. And the second reason that big brains are focusing on crypto gaming is that it has inherent value for its users, meaning people will play for entertainment. This means that the Web3 and blockchain infrastructure are not a focus, but just a feature of the industry. And this is crucial for long-term adoption and sustainability of projects, as it reduces the likelihood of it becoming a Ponzi scheme like a lot of DeFi products. Because DeFi is sort of the opposite, where there's no entertainment value. The value of the protocol is actually you promising not to sell your tokens and hoping nobody else sells their tokens to get rewarded with more tokens that you also promised not to sell. Pretty stupid. So these 2 factors lead to what I call the Alex Becker thesis, which is that crypto gaming market goes brrr. Or said more specifically by Becker, he predicts the total market cap of crypto gaming will reach $100 billion valuation in just 2 years and a $1 trillion valuation in 5 years. And right now, it sits at about $8 billion. And so, if his thesis is correct, you can turn $1 grand into $12,000 just investing in the market average over the next 2 years, or $1,000 into over $100,000 by investing into the market average over the next 5 years. Now, full transparency, I have not personally hit 100x in crypto gaming, even during the last bull run. I'm absolutely not an expert, but just a humble man on the ground who has spent the last 12 months of the bear market breaking down the influencers who have achieved these results, reverse engineering their portfolios, what investing strategies they used, and spending months breaking down hundreds of crypto projects to find the following 7 tenets of crypto gaming investing. And these 7 tenets are going to determine how much money you can keep in the next bull market. So let's get started. Tenet number 1, don't swim upstream. Warren Buffett says that opportunities come infrequently. When it rains gold, put out the bucket. We can pretty confidently say Warren probably wasn't referring to the crypto industry when he said this quote, but I think it's more applicable here than anywhere else. Because contrary to all the mainstream headlines where Bitcoin's either up 1,000% or down 1,000%, crypto actually spends most of its time trending sideways. And most people are going to lose money in crypto because they try to go against the market and they're not patient enough to wait for a bull market. Crypto God John tweeted, "Most of you guys will never make life-changing money holding altcoins. You guys panic at the first red day. Before Link did a 370x return for me, there were months where it did not move. A sideways and a bear market isn't making anybody rich. And so if you see the market in a bear or a sideways market, it's not the time to get rich. It's not the time to cash in on 100x gain. It is the time to research, dollar cost average your way into your favorite tokens, and be patient. And never try to outtrade a bad market. And as soon as the market turns, and I'll show you in this video how to identify exactly when the market is turning so you're also not too late on the other side. But once it does, grab the biggest bucket you possibly can and let the golden rains fill it up. Tenet number 2. Buy narratives not fundamentals. This might be my favorite tip, so listen up. There's only 3 strategies you can use to decide whether you want to invest in a token. The first is my least favorite, technical analysis. This is where you strip a project of all real-world context and apply a layer of Fibonacci retracements, Bollinger Bands, and spaghetti Alfredos over a price graph and make up predictions on where you think the price is going to go. The second strategy is fundamental analysis. This is where you can take the revenue of a project, the treasury or the reserves or the real estate and assets they own, and calculate that it is fundamentally undervalued. For example, check out this tweet by Kryptonite. He calculated that OXO, a project that pays holders dividends in Ethereum, would pay a holder 10 times more what it costs them to buy into the token. And the third strategy is called social arbitrage, and is the most powerful strategy in crypto because it uses social narratives. This is a theory that comes from a YouTube channel called Dumb Money, where they identify social trends and invest in them before the mainstream market catches up. The famous example that Chris Camillo from Dumb Money uses was that his kid really wanted to make slime back when making slime was a massive trend on YouTube and TikTok and Instagram. He took his kid to a hardware store to get the main ingredient in the slime called Elmer's glue, but realized that it was sold out in every single store in his town because every single kid was watching TikTok, wanted to make slime, and bought out all the Elmer's glue. He went home, found the parent company that owned Elmer's glue, and invested before they publicly submitted their quarterly revenue, and stock went boom. So how does this relate to crypto? Well, Warren Buffett's mentor, Benjamin Graham, had a fantastic quote. In the short term, the market is a voting machine, and in the long term, it's a weighing machine, meaning that bad stocks or bad cryptos can pump just because people are voting on it with their money to be a good project. But eventually, without sound fundamentals, it will eventually crash. But the thing about the crypto market is that we are absolutely in the narrative voting phase, and I feel like we will still be here for quite a few years. And you can realize this because even really crappy crypto projects can do insane things. Take a look at this. This is Blocktopia. It was a metaverse project launched on Seedify, and it still hasn't even released a working metaverse project 18 months later. Very poor fundamentals, but the narrative of this being the go-to metaverse for gamers, and even a fake rumor that Facebook was going to use their infrastructure, skyrocketed this project to a fully diluted market cap of $35 billion. So when you're looking at a project, you need to ask, what is the crunchy one-liner narrative that you think the mainstream hasn't realized yet? A couple of examples to help you. Krabata. This was supposed to be the next Axie Infinity, and it 166x'd from its ICO price. Or Altura, which was supposed to make NFTs dynamic and no longer static 2D JPEGs. Alex Becker invested into this one, turned $4,500 into $216,000 in just 60 days. Or Gala, which is supposed to be the EA Games of the metaverse, and it went from 9 cents to 81 cents in just 2 weeks. And this takes us to Tenant 3. Buy before everybody else. Sort of an obvious one, but it's more nuanced. Once you come across a crunchy narrative, say like Altura's mission to turn NFTs into NFTs 2.0 and make them dynamic, you then need to ask yourself, where are you in the maturity curve of this social narrative? Because even if a project has everything going for it, you can't be the last person to hear about it and invest in and just be exit liquidity for all the big brains who got in earlier. Because you need to realize, although this is nuanced in the long term, but in the short term, crypto investing is a zero-sum game. You're always going to need someone to buy your tokens for a higher price than you paid. And the best thing that I've learned about the culture of Web3 and investing is that most people in Web3 work off a buy the rumor and sell the news philosophy. Meaning the news that you think is going to blow up a token will actually be the one that makes it go down in price. But the rumor that the news is about to drop is the thing that's going to skyrocket. For example, I bought a Curio card NFT for $5,000 and it tripled in price, but I still held onto it because in 30 days, Christie's auction house was actually going to be auctioning off this exact artwork. And I was like, okay, this is a no-brainer. As soon as Christie starts auctioning this up, the mainstream's going to be all over it and it's going to be well past $1 million. Well, for the next 30 days, it crept from $15,000 all the way up to about $75,000. But the day of the auction came and I still held it because I'm like, okay, once the New York Times and the mainstream media and CNN pick up this auction house auctioning off this NFT, this is going to be the real boom. As soon as the auction day actually arrived, the price crashed. So when buying and selling crypto, you need to beat people in, but also beat people out. And Tenant 5 is the best way to do this. It's called sell on the way up. In the peak of the 2021 bull market, there were millions of people in the green. You open Twitter and you see people making $1,000 a day or 10 grand in a day or even $1 million in a day. But over 90% of these people ended up actually losing money in the long term because they thought prices were going to continue to rise. My personal philosophy that kept me in projects for way too long was I'm up 10 grand, but I don't need 10 grand. Imagine if this became $100,000. Now that would be cool. But when you apply this to all of your investments, there's never a time where you're going to be cashing out. A popular strategy that is very easy to implement is that once your investment doubles, take what you invested off the table so you're playing with 100% house money. Otherwise, you're going to be shocked with how much these tokens can actually drop because once again, they're based on social narratives, not fundamental. Krabata is down a staggering 3,384x from its all-time high. Altura was down 30x just in the 365 days after it hit its all-time high, and the $216,000 if Becca did not sell it, which he did because he's big brain, would be worth just $7,200. And even Gala is down 46x from its all-time high that it hit in just January this year. Which takes us to Tenant number 5. Market caps, not price, you big goose. This fact still shocks me. A lot of people think that the price of a cryptocurrency is more important than the market cap. You see a friend running around town like, oh my God, this crypto's at 1/3 of a cent. Imagine if it got up to $1. That would be a 300x on your money. Now, if you don't know why this is so silly, it's because there is no context in the price of a token for how much the project is valued at. For example, Dogecoin is priced at just over 6 cents and its market cap is worth $9 billion. Really low price, really high market cap. Really low price, really high market value. As opposed to this token, Monavale, that is priced at $308 per token, but only has a market value of 3.2 million. Now this is important to note because Dogecoin would need $90 billion of value to enter the project in order for you to turn $1,000 into 10,000 to get a 10x. 90 billion. However, Monavale would only need $32 million of value to enter the project in order to 10x your money. The smaller the market cap, the easier it is to multiply your money. Of course, this normally means there's also more chance to lose money. But while we're talking about market caps, here's a bonus tenet that even Alex Becker messed up on in the last bull cycle. He recommended a token called Tenant Arena, THG. It was a really professional looking game that was available on mobile and had millions of players. But he overlooked a terrible fully diluted market cap ratio and vesting schedule because this project diluted 6x over the next 12 months, which basically means they printed 6 times more tokens than was originally on the market in just 1 year. Now this and other factors rocked Tenant Arena, and now it's down over 99% because of it. So please remember that market caps is the most important stat that you can be looking at when reviewing a project. How big is it? How much value needs to enter the market to 100x your money? And what is the circulating to fully diluted market cap ratio? And of course, if it's a really high ratio, what is the vesting schedule of those tokens? Now this takes us onto the good stuff, Tenant number 6, because now you know what social arbitrage is and how narratives are the most powerful factor for impacting the price of a token. You can start to understand what is the quickest and most effective way that the narratives about these crypto games are spread and believed. Well, these narratives are just story, and a story is only as powerful as its reach. And the modern day printing press, the thing with the most reach is of course social media. And the influencers with millions of followers and sometimes hundreds of millions of followers have the power to create billions of dollars of value for a crypto project in just one tweet. From people like Elon Musk, Michael Saylor, Gary Vee, Alex Becker, Crypto God John, Ilya Trades, or even the big dog, Benji from across the Rubicon. These people have unprecedented power to spread these narratives. I mean, Gary Vee's NFT recommendations averaged a 400% return in just the 7 days after he tweeted about them. So my fascination started to become, how do we get upstream of these influencers? How do we find these crypto gaming narratives before they do? Or at least at the same time? Well, we need to understand, where is Alex Becker wetting his whistle and getting his information from? And I attempted to discover this in a few different ways. From reverse engineering his Twitter feed, putting trackers and alert systems on his crypto wallets, and even just finding underlying patterns between which cryptos he's buying, led me to some pretty incredible insights. I'll leave most of the details for future videos, so make sure you're subscribed. But one of the biggest realizations I had from this is that most of his recommendations were from upcoming IGOs on gaming launchpads like Cedarfy. In fact, out of all of Becca's recommendations, about 40% of them came from the crypto gaming incubator of Seedify. Now, in my opinion, this 40% are probably the worst 40% of his recommendations overall, so I don't think he's going to continue this into the next bull cycle, but there are other things that we can do to get ahead or at least on pace with these influencers. For example, I set up crypto wallet tracking alerts on all the top influencers like Alex Becker, Gary V, Ilio Trades, Lady of Crypto, Crypto God John, so that I would get a message whenever they bought into a new project. Now, this worked incredibly well because they're getting into these projects before they go ahead and tweet these social narratives out on Twitter, meaning we are getting access to the same opportunities that they're getting, but also with a social insurance policy that millions of followers are most likely to come in behind you, even if the token fundamentals are flawed, because once again, this is a social narrative game. Now, we've made this software available for everybody in our Patreon, and I'll make sure to open up spots as I drop this video, so click the link in the description below if you want to get these alerts whenever these crypto influencers buy, because this is also how you know when the bull run is going to return. It's when the influencers start buying, because it's 50% the market needs to turn and 50% a self-fulfilling prophecy that influencers start buying so everyone else also starts buying. We also have some pretty incredible portfolio trackers, tools, resources, token breakdowns in our Patreon. So if you do want the edge in the crypto gaming market against all the mainstream small brain crypto gaming investors, click the link in the description and join us in Patreon. And for everybody else, keep enjoying the free stuff. Which takes us to our 7th and final tenet. Making ridiculous money with crypto gaming is fun, but it really should not be your only income stream. Alex Hormozi has a quote. He says, "Your business works on you more than you work on it." And investing in random crappy cryptocurrencies that Alex Becker recommends and making 100 grand doesn't build much character or much skill. You need to think of this as bonus money. Go out and create a business around your passion. There's never been a better time to be alive and actually dedicate your life to something you're passionate about and get paid a lot of money to do it. So go and scale that up to 6 figures a month and then use a small percentage of that profit to come back to the crypto gaming market and invest in brilliantly undervalued crypto games. But once again, do that in a bull cycle. And if you want me to drop a video on how to identify for yourself brilliant crypto games that are undervalued and are likely to 100x, comment brilliant in the comments below and I'll get that done for you.